practice some journal entries. Remember the most basic rule, all journal entries balance. Debit means left, credit means right. Our other rules are assets, things on the left-hand side of the accounting equation, increase with debits. Liabilities and shareholders' equity, accounts on the right-hand side of the balance sheet, increase with credits. Revenue increases equity, and expenses and dividends decrease equity. Or you can draw this little chart up and remind yourself that assets increase with debits. That's easy to remember because assets are on the left-hand side of the balance sheet and debit means left. Liabilities and shareholders' equity increase with credits. That's easy to remember because those accounts are on the right-hand side of the balance sheet and credit means right. Expenses are debits, expenses are debits, expenses are debits. And revenue, which is the opposite of expenses, must increase with credits. Finally, dividend starts with D, and that reminds us that we record those with debits. First transaction, the company issues common stock for $50,000. In this case, issues means sells. So we're selling equity in our business for $50,000. What's happening to cash? Cash is an asset. It's going up, so we're going to debit cash. And shareholders' equity is going up, so we're going to credit common stock. Notice dollar amounts of debits equals the dollar amounts of credits. We debit and credit specific account titles. And in this case, we're going to pretend like we sold the stock at par value. If we sold it for more than its par value, which is a meaningless number, we'd have an extra credit over here for additional paid-in capital. And the only place that we use sentences or phrases is in the memo section. That's kind of like a comment section to remind ourselves or the next person exactly what happened. Next, the corporation buys some land for $40,000. Land is an asset. It increases with debits. Cash is an asset. It increases with debits, which means it must decrease with credits. So let's pretend like that happened on April 2nd. Debit land for $40,000, credit cash for $40,000. Next transaction, we fill up the supply closet with $3,700 worth of supplies. That is an asset, so it's going to increase with debits. But we're not going to pay now, we're going to pay later. And since we don't sign a note, if we signed a note, that would be called a note payable. Since we don't sign a note, that's called an account payable. Any account that has the word payable in it is a liability account and increases with credits. So we're going to debit supplies for $3,700 and credit accounts payable for $3,700. Again, we put the date out here. We write the debit first, we indent a little bit, we write the credit, and we debit and credit specific account titles and write our sentence in the memo section. The next transaction, we perform some services for a client and get paid in cash. We're getting paid in cash, so cash is going up. Cash is an asset. Assets increase with debits. Then we're going to have some revenue. We earn something. We satisfied a performance obligation, so we get to book some revenue. Revenue is recorded with credits. So let's say it's April 4th. We debit cash for $7,000 and credit service revenue for $7,000. I'm going to make the service revenue account in red font because it's an income statement account. The rest of these accounts are all balance sheet accounts, but this service revenue is an income statement account. And again, we debited and credited specific accounts and wrote a little sentence in the memo section. Next transaction is just like that one, except the client is going to pay us later. So we do the work, we satisfy the performance obligation, we get to book the revenue, but we're going to receive the money in the future. That's called an account receivable. Account receivable is an asset. Assets increase with debits. The revenue accounts, they increase with credits. So we're going to credit service revenue for $3,000. Next transaction, we pay our rent of $1,100, our salary expense of $1,200, and our utilities expense of $400 by writing the check for $2,700. Expenses are debits, expenses are debits, expenses are debits. So we're going to debit the expense accounts. Cash is an asset. It decreases with credits. So we debit rent expense, debit salary expense, debit utilities expense, and credit cash. In real life, there'd be 3 separate credits to cash because we wrote 3 different checks. It'll make our bank account easy to reconcile. But since we're just learning accounting, we're going to credit cash for the $2,700. The next transaction is we're going to pay off some of this accounts payable that we incurred before on April 3rd. We're going to pay it down by $1,900. Accounts payable is a liability account. That means it increases with credits and decreases with debits. So we're going to debit accounts payable for $1,900 and credit cash. Cash is an asset, and cash it decreases with credits for that same $1,900. So we debited accounts payable and credited cash and made a little memo down here to remind ourselves what we just did. On April 8th, our major stockholder remodels his house. Since that's a personal transaction and not a business transaction, there's nothing for us to record with a journal entry on our company's books. On the next transaction, the customer from April 5th pays us the $1,000. So our cash is going to go up by $1,000. We're going to debit cash for $1,000, and this accounts receivable is going to decrease. Assets increase with debits and decrease with credits. It's going to decrease by that same $1,000. There's the date, there's the accounts, and there's our little memo to ourselves. On April 10th, we sell some of that land that we bought. We sell it for $22,000, which is exactly what it cost us. So why don't you pause this video and see if you can create the journal entry where we sell that land for $22,000, which is exactly what that land cost us. I hope you got it. Cash is an asset, so it increases with debits. We debit cash for $22,000. Land is an asset, so it decreases with credits, so we credit it for $22,000. If we had sold it at a gain, if we sold it for more than $22,000, we'd have a gain, which is a credit. If we sold it for less than $22,000, we'd have a loss, which would be a debit. Last one, the company declares and pays a dividend of $2,100. Dividends are recorded with debits. Dividends are recorded with debits. Cash is decreasing with a credit. Normally what would happen in the real life, we would have a dividends payable liability, but in this instance, because we're just learning accounting, we're going to declare and pay the dividend on the same date. So we debit dividends for $2,100 and credit cash for $2,100. And that's journal entries. Hope that helps.